Sheila, these markets, everyone can agree, are odd, odd, odd. What do you do to protect your downside? What do you do to hedge this extraordinary move?
Well, thank you so much for having me, and it is an extraordinary time. I think, in terms of hedging, it's incredibly difficult to say what will happen in a month from now, much less a year from now. So I actually see more and more clients globally worrying less about hedging with anything beyond having a larger cash position than usual, and more worried about trying to look through shorter term trends towards the long term. The hedge is really not getting caught in the kind of flavor of the moment type trading, and certainly not getting caught in the focus on what might be happening moment to moment, particularly when it comes to a virus and a pandemic such as this.
It is an extraordinary time, Sheila, and of course the arch battle is active versus passive. Bloomberg has an article out today on Vanguard's struggles in Europe with the ETF business as well. What will predominate forward given this equity chaos? Will it be a further move to passive management, or can active have a glimmer of the past?
I actually think it's a fascinating time to think about this debate. And I go back to when you and I, it seems like a millennium ago, but you and I sat in the snow in Davos and talked about this very issue. And a glimmer in our eye in that conversation was a worry about this virus we were hearing about from China. Here we are today. Yeah. And I think when people went to equitize, there was no question that the easiest way to equitize was in an index fashion, often with ETFs, and very much focused on the U.S. market. So people went liquid, big, fast, simple. I think as you look towards the long term, what I'm talking to clients about and where I see minds headed among the large global investors is converting that into a more active style as they start to decide where they think the true resilience in global economies are, whether it's diversifying away from the concentration they had in the U.S. in the initial stage of putting some money to work in equities when they saw attractive levels, or whether it's thinking about what the real outcomes are in a long-term perspective of how this pandemic changes behaviors, changes the needs of consumers, and changes things like the way we work or the way healthcare is provided. Those are the long-term trends that demand active management.
Sheila, good morning from London. It's Francine. And before we come back to some of those longer-term trends, what will it take for this market to correct right now?
Well, look, I think there's no question that we've seen the market behave in a fairly positive way in the light of some pretty challenging circumstances. And that's true whether we think about the pandemic, whether we think about the messages you were just discussing around energy and oil, or whether we think about the social unrest and the terrible things that are the circumstances coming from there right now, which we all abhor and would like to see change and are focused on change. And so as you think about that, I think there's no question you have to move forward, move ahead, but have an eye with caution towards these markets. They're priced for seeing a continuation of the good news, a continuation of low rates of pandemic, of COVID in places that are starting to reopen. They're priced for really good news, good news, good news. And we know that's never the case in these markets, particularly with a situation like this.
Sheila, about those longer-term trends that you were talking about, we all, know that maybe there's more working from home, that travel will be disrupted. Is there anything that we're overlooking at the moment?
Look, I think one place that we're certainly focused and that I think is a longer-term trend we have to be aware of is what does all this mean from a regulatory perspective? There are so many industries that have been forced into a new paradigm. And the way that new paradigm solidifies is only if regulators agree or perhaps if regulators push things that way. And you can see this in multiple industries, whether it's our industry of finance and thinking about the positions and the roles that have been allowed to be performed in a remote way that in general global regulators want to see done under close supervision in an office setting, and we expect that to return, or whether it's things such as the processes within healthcare, when it comes to approvals of drugs, when it comes to large-scale trials that have been disrupted. And I think new ways of doing things and new ways of accelerating when there are problems that we're facing, particularly in areas like healthcare or some of the technology solutions we've seen, regulators will get involved and they'll have a big stake in whether we see advances stick or whether we go back to the old way of doing things.